Okay, we're ready.
We're ready, let's roll.
We're live now. Okay, what's up, everyone? My name is Anthony D'Elia.
And I am Brian Raspberry.
And we're here to talk about establishing credit worthiness to get a home loan. And so obviously everyone knows that you got to have some kind of credit to qualify for a home loan. And Brian is the expert when it comes to mortgages and everything you want to know about finance and lending and all that. So we're going to just have a conversation about what it kind of takes for someone who maybe is on the cusp of qualifying, or even surprisingly some people that on paper might think that they qualify because they have the right score, but what they would need to do in simple steps that can be done to help you improve your credit worthiness to qualify for that home loan that you want. So let's talk about what are the current minimum scores required for the standard loan types: conventional, FHA, VA. Like what's the floor?
Yeah, exactly.
Not the ceiling.
The floor for basically FHA and VA has to be at least 560 and higher.
Okay.
Those are the floors. For a conventional loan, you're looking right at about 620.
Okay. So now 560 being the floor for the FHA and VA loans. So let's talk with that for the lower on the, if you're lower on the spectrum, what it would take to easily improve your score, the kind of things you look at. So what's the first topic that you would say I guess you would advise people on that they need to either have? It's right there.
Yeah, simply put, yeah, absolutely.
I'm pointing to it on this.
Yes, with trying to buy a home, you at least want to have a job.
Got it.
You want to be employed. You want to be employed at least 2 years or more. If you're self-employed, you need to have at least 2 years tax returns to show proof of.
So, and I think it's important to clarify for people, because some people might say, well, I have money or whatever, or they have some money in the bank saved up, but the bank is looking at their ability to repay.
Absolutely, absolutely.
And so the job is necessary because it shows that you're going to keep getting money.
Correct.
To make those payments, right? So it's important to clarify, it's not, you don't have to have the best job in the world. They just want to see, like, is what you're bringing in going to make the payment on the mortgage?
Absolutely.
Okay.
Yes.
Okay, so W-2, and you had mentioned something earlier that I thought was really interesting, that if someone just graduated from school and they haven't been working, they just got a job, and maybe their credit score is good because they had a credit card and, they had some credit, but they don't have the work history.
Yes.
So tell me about that for a student, maybe a recent college grad or something, or a trade school graduate who has the right credit score, but they don't have the work history. What can they do?
We can actually use their schooling as part of their work history. So if you went to a 4-year college degree and you graduated and now you have a job right away, as long as you have the offer letter, can show proof of being in school, which will come from college transcripts, we can run with that as far as your work history.
Very cool.
Yeah.
Okay. I think that's important. Okay, so now credit history. Why is credit history so important?
Credit history, simply put, just shows your ability to pay people back. And we definitely want to be able to see that you can pay people back, something as small as a credit card all the way up to something as big as a house.
Got it. And I think that goes back to the worthiness part of it, right? The worthiness is your ability to repay. Your credit history is your payment history, essentially, to people you have credit with.
Yes.
Right?
Yes.
And so the lender might say, well, I want to make sure you paid on those other accounts, because if you paid them back, you're more likely to pay me back, right?
Exactly.
Okay. That makes sense.
Exactly.
That makes perfect sense. And then is the credit score the most important thing in qualifying for a home loan?
It's one of the important things, but it's not quite the most important things, because it's kind of credit score and credit history. You really got to kind of have a blend of it, because you can have a decent credit score like in the mid 6s, but if you don't really have any credit history behind it, or you have a lot of collections behind it, you may need to get a little bit more history to help out that score.
Okay. And so again, history would be months with revolving accounts.
Correct.
And establishing that payment history. I think that's the important thing. So it's not just having credit, because you could have a lot of available credit, but if you don't owe anything and you haven't been making payments, is it really helping your credit score improve?
No, not really, especially if you're trying to build your credit. Now, if you're already really high, you're like 750 and higher, and you're really keeping low balances or no balances at all, but you have like a car payment or something, that's still considered good credit. You just shown the ability to make payments on time and pay them off monthly. We can see that too.
Gotcha. So you'd probably say that if you have really good credit already and you have established history, it's okay to keep no balances because you already have a good established history. Maybe you're in the 700s or something,
Yes.
and you just don't want debt. That's fine because they
Yes.
see the length of time you've had credit.
Absolutely.
Okay, and so, but if you're newer and you're younger or you're newer to credit, you want to try to have some kind of minimum balance just for the purpose. Does it matter what the balance is? Like if you, let's say the college student example, they just graduate and their credit's in the 650s or something. Does it matter if they just got a $1,000 credit card? Do they have to keep a high balance, or could it just be a small amount as long as they're making payments?
Well, rule of thumb is you really want to keep your balance as small as possible. So with that being as small as possible, and try to keep it at 30% or less.
But the building of the credit history would come from payments, but it doesn't matter the kind of payments. That's what I'm trying to clarify.
Yes,
Yeah.
yes. You want to have that payment over a certain amount of time. Keep your balances low because it shows that you're actually taking care of your usage, but keep the payments there so you're actually building history.
Got it. Okay. And then how important is having enough credit? So like enough in the available credit realm of the cards and everything.
Again, that comes back to how long you've had credit or if you're trying to build history. If you're trying to build history, you definitely want to get some revolving credit going. Just even some small, simple credit cards and use them for gas or groceries. They turn around and pay them off. Don't go out and take a trip on it or go out and spend on a bunch of electronics.
Right. And you're not doing it for the purpose of getting in debt. You're trying to
establish
something that probably you would pay for anyway. Just put it on the card so you can get that history of payments.
That's correct.
That's the point. We're trying to build payment history because that's what increases your score. Okay. And then you mentioned something that I thought was really fascinating for one of your clients that you're working with now. Their credit was not where it needed to be.
Yes.
And one of the things that you are able to do, and I think most good lenders are, is they can do a scenario. Like they have software that it can actually plot. You can look at someone's credit and you can do like sample scenarios of what they could do to fix their credit. And so tell me about the scenario you were saying where if they got a new credit card, it somehow improved their credit.
Yeah, in this situation, he had credit history, but he had a lot of negative credit history. So he had collections, but he had on-time school loan payments. So in his scenario, I needed to bump up his credit history. So trying to get a credit card, it would jump him instantaneously within 30 to 45 days, up about 20 points.
Wow.
And with him doing that, he's now building credit history. Now, as you can see through my model, as long as he continued to make those payments and left everything the same, now everything has to stay within his credit profile. It's just a credit card we're talking about. His score would jump up over time dramatically.
Wow. I think that's really interesting because I don't think most people know that by getting a new credit card, it can actually, in some cases, improve their score. Not necessarily in every case, right? If they're putting a big balance on it right away, obviously that's not going to help.
Yes.
But I think it's important to know that you have the tools and good lenders have the tools to be able to figure out would that make a difference or not, you know? So it takes all the guessing out, really.
Absolutely. Any great lender out there actually has the ability to do exactly what I just did and showed you. And you want to have that lender that's actually going to walk you through step by step and then stay in touch with you through the process. Whether it's buying a home in 1 month, 6 months, or a year or two from now, you want to have that lender that's still keeping in touch with you periodically to make sure you guys are on the same path.
Love it. Any other thoughts on simple things people can do to increase their credit worthiness or their credit score? Or do you think we kind of covered it all?
I think we pretty much covered it all. Just don't go out and if you're looking at buying a house in the near future, don't go out and buy something that you really don't need.
Yeah, no big purchases. Right?
No big purchases, you know, especially like a car payment, because a car payment can swing your purchasing power dramatically.
Yeah, well, and even, I mean, that's not even really a purchase, right? Because they're just getting more payments.
Correct.
So if they want to buy a TV or something, that's probably fine as long as they pay it off right away.
Exactly, exactly. But trying to get a car payment could swing you.
So don't add debt. That's the secret. If you're trying to get a house and you're in that, you know, I'm concerned about my credit phase, stop spending money or stop adding to your credit, your total debt, because that will certainly affect it. If you need to spend it, if you paid it off, it's not a big deal, right?
Absolutely.
And in fact, it would be another payment on your credit card, so it would be fine. That's good. Okay, awesome. So that was some questions that we got from viewers just like you. So if you have any questions, please feel free, click subscribe down below, but also comment with any questions that you have on any of the video that we provide. And we'll catch you on the next one. Take care, guys. Bye-bye.
Bye.